The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN.com. Let's check out where your market's at right now. We got the S&P is currently down 7 points. We got the Russell is currently up 1 point. So actually sort of strong among all the other ones there. We got the Dow's down 99 and Nasdaq's down 51. It has just been getting slammed ever since close the market yesterday. And full throttle earnings season going on. Dow down 101 points. We got gold down 11 points, continuing to get crushed, breaking through that 1100 level. Looking on over at copper, all the metals getting hit pretty hard, down 0.043. We got oil right now is currently down 96 cents on the day. We got natural gas is down a solid, let's see, what do we got right now? Down 0.02. We got a corn is down 4 points, and we got soybeans down 6.75. Bonds is currently up quite a bit. So 1.01, a big surge in bonds and dollar index. Dollar getting stronger across the board. And just as, you know, from the last meeting and the minutes and everything that's been coming out, people speculating pretty heavily that they will be going ahead and raising interest rates possibly as early as September. Looking on over at the euro dollar, it's down 66 pips. Euro yen is down 60. Euro pound is down 62. Pound dollar is currently up 60 pips. With the pound yen currently up 1.04. Dollar yen is up 20. Aussie yen is down 55 pips. Aussie dollar is down 56. The dollar franc is currently up 34 pips, and the dollar CAD is up 83. And that gets you caught up on the lunchtime, like I said, market wrap on where everything is currently sitting there. And then let me go in and add in one other little piece over here. I want to go ahead and silence this thing out here, and I'll come back to that in a little bit. All right, now going in and looking a little bit deeper at where we're at, just on the current news stories for the day, and just get everybody caught up. So like I said, you ought to be caught up on where the markets are at. Now let's catch you up on sort of what's in the news. Greece deposit run is forcing the ECB to boost the Greek payments yet again. People are going in and they're like, I want my money. I don't trust anybody, and I don't blame them. So Greece is, they're coming in and they're going in and, take your money out of the chest and out of the houses, which are not safe in any case, and deposit it into the banks. And the Greek banks are like, whatever. You couldn't, it's amazing. The bankers are really saying, hey, it isn't safe in your house. It isn't safe in your chest. It's safe in the bank where we can close the doors, lock them, and you can't pull any of your money out. Just amazing. So the ECB just put in another $900 million increase in emergency liquidity assistance. So, you got to love some of these comments, right? The banks are absolutely trustworthy. They're guaranteed by the ECB, but they would have been even more powerful if 40 billion euros had not been withdrawn in the last month. It's like, if they're so trustworthy, then why can they close the doors until you only get 60 euros a day out of your account? Let's all help our economy. Be patriotic and just, take one for the team. There will be no need to haircut deposits in the future if we all act responsibly. Wait a minute. So if people don't act responsibly, then you're telling me you are going to take a percentage of all my money that's in a bank. Come on. People are only going to fall for so much crap. And this is just as we predicted last week. So even as unsustainable Greeks meander day to day with yet another capital infusion to avoid a sovereign default, its insolvent banks just become the first casualty of reality. However, they may not be the only ones. Recall the bank depositors are nothing more than unsecured creditors. And if and when the reality of the Greek economic collapse happens, as it appears to have finally done, it won't just be equity that is wiped out. Depositors themselves will face the risk of creeping haircuts to their liabilities. And that's what everybody's afraid of. They're afraid not only that they're not going to be able to get their money out of the bank, but that they're actually going to take their money, take a percentage of their money, and just, hey, by the way, you just lost 15-20% of your account. So anybody who has any sense would be very hesitant to deposit money into a Greek bank account. So by putting more money into the ELA, I mean, the good thing is that's just allowing people to get their money out of those banks. They'll be just, I mean, it's I don't know, it's just really rough. And, they're going over there and they're probably putting their money, in other assets right now, at least in euros, if not in dollars or gold, which aren't real assets, but, gold, obviously, which has been crushed lately, not so much because of Greece, but because of China's massive liquidation. And, pardon me. And Japan also had a pretty large liquidation as well of gold. And that's been a massive driving force in it dropping on down. We got U.S. home sales came on out. And they came in near an 8.5-year high. Prices moving on up. So, with those home sales coming on out, prices moving up. I mean, that's good for, a lot of people. It's sort of scary for others. But it's, I mean, if you're looking to sell a house, I mean, people are buying them like crazy right now. And, so that's just going on right there. And that's another one there on financial juice right there, picking on up. But U.S. home sales hitting a near 8.5-year high. Prices moving on up, like I said right there. We got 8.5 years, highest levels in 8.5 years. So a lot of, they're saying, hey, it's a lot of pent-up demand. I mean, it could be a lot of things. But, HGX rising on up, Apple, which fell pretty hard on Tuesday, bringing down the Nasdaq, and with their fourth quarter revenue forecast, that fell very short of estimates and missed quite a few targets on iPhone sales. So things not looking so bright there. We're going in. Let's see here, over 5.5 billion wiped out of European tech shares with Apple's disappointed, outlook. So I mean, that's pretty massive. So a lot of the other companies that may produce pieces for those companies, suppliers for the phones. That's one of the things to always look at for you stock traders out there, of course, is, does this company supply something for another company? What is it linked to? So if they make, semiconductors or chips or whatever for, Apple or somebody else, then that obviously those earnings will greatly impact those additional companies like ARM and other, massive suppliers like Intel and Qualcomm, all being heavily impacted by Apple's earnings release. We got the euro dollar, the euro dropping heavily. The dollar is getting stronger and stronger. It's below the 1.090 level, moving closer and closer to par. We'll see if we get that par this year or next. But so it was just a massive day. Had a great day on Tuesday, the best day in a week, and today it has erased half of those gains, currently trading down at 1.0890. So just some massive moves there. We got WTI crude is moving along for us. And so let me see here. Let me get that link. It's not quite working. Let me post that. So WTI back below 50, taking crude stocks to the highest level in 80 years. After the inventory buildup takes them way up, but bringing it on back down, making it cheaper, of course, makes it better to hop back in and start drilling. In the low drilling areas, but not ones that do the deep drilling because it gets really expensive. There's a few companies I know here in Texas that do really shallow drilling, and they do really well, especially during these times, because they actually are still able to be profitable at these cheap, low oil prices. But the ones that rely on the deeper and heavier drill discovery, they usually seem to back off quite a bit, obviously, because that raises the cost up for the payout whenever oil is as low as it is. We got gold sliding on down 1% to a 5-year low, as it says that investors are pulling back. But so let's see, that was that's the wrong link there. But anyways, so profit slips, the dollar good enough that's impacting all sorts of company. Whirlpool quarterly profits go down as the dollar gets stronger. So just with their international business in Latin American countries. And let's see, what else do we got? We have NASDAQ opening with, pardon me again, the biggest gap down since January as dip buying panic ensues. It has been, it's been fantastic. If you've been watching NASDAQ And, always paying attention to these earnings, making sure you got these earnings on your calendar. But Apple and Microsoft getting slammed, NASDAQ gapping 2% lower, one of the biggest drops it's had. So, and of course, a lot of panic-driven buying, and then it flies on back down. Let's pull up just a basic Apple chart real quick. Let's look at NASDAQ charts. We'll pull up a few of these side by side. And let me see here. I would go in and get rid of that piece right there. But you can see just a massive drop on earnings. Huge. And unfortunately, after hours, so it's one of that's a little harder to trade. You can't really trade it on Nadex since it closes along with the index at 415. But anyway, so flies down, goes flat, and then drops down even further right over here. So right going into the day, drops down further on the NASDAQ right there. Just boom, 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 and then just bye. So you gotta love that. It's like, where did the buys come from? Who is buying? But anyway, so flew on back up. We can go over here. We can do some really simple technical analysis. We can pull up Fibonacci retracements. And let's see pretty much where we get over here. Looking at this, right over here at this low. And we basically got a 50% retracement. So that's something that I guess you should not be surprised about. That happens pretty constantly when you see these massive drops. You usually see a pretty good pullback to the 50% line right there. And we basically pulled right back to a 50% retracement level before pulling on back down. And this would be where you'd want to be taking profits, or at least tightening stops on your long trade. So, this pops up, you decide to buy right about here. Where do you think it's going to go? It's going to go on up to the 50% retracement level. So when you see these big drops, look for, those 50% retracements. It's a great trade setup that you can check out. You can go in, you can look at binaries that are way up here. You can look at spreads, whichever ones you can find that are opened up, because it dropped down, but you got a lower spread. You can look at buying potentially, or there's a lot of different trades, a lot of different ways to set it up. You obviously got futures. You can hedge off futures with spreads. There's a lot of ways you can trade them. But the number one thing is just real simple. Fibonacci, it's called the golden ratio. It's one of the Gann ratios. It's a Fibonacci ratio. It's not even about fibs at this point, really. It comes right down to it's a 50% retracement. And there's so many traders that look at that 50% retracement that you will see it often on markets that you look at have that big pullback. And this makes for a pretty easy trade setup, especially if you can do one with defined risk in the process. So you don't have to worry about the oscillation before it finally does take off. And it goes a little bit lower, you need to lower your profit target, right? So, but you can find these 50%, massive drops over and over again, and they pull on back. All right, anyway, just there. We'll be back right after this break.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Alrighty, folks, we're going back here to the Diagnostic Trading Hour. And let's get you caught up on the news and where everything's been so far and what we got coming up for the week. Let me see here. We pull this on up and we'll dive right into it. Make sure you got your news trade plan ready to go so you can take advantage of the news that you actually know is coming out. We can't always capture all the news, but we can go in and say, hey, what is there that we can take advantage of? And let me go over here. I'll pull up a couple charts, and we'll do a little review. So what do we got? We got CAD wholesale came out earlier this week, and so we'll pull that one up. Let's go ahead and look over at the dollar CAD. And right over here on dollar CAD, we were looking for a move between 8 and 10 a.m. this Monday on the CAD wholesale inventory report to be about $30. And so that would put us on 7 at 10. So let me scroll back just a little bit here. Or let's see here, 720, I mean. 720. So right, yeah, I was in the right spot. Okay, so right there. And take that on in to the morning session. And on 720, we were looking for a move between 8 and 10 a.m. So we'll go right on over here to 8 o'clock. And then we're going to measure the move till 10 o'clock. So right there, sort of ending on a high note, right over there. And we got a total of 25 pips right there, and we were looking for 30 or less. So made about 5 pips on that. Not a massive trade, but nevertheless a profitable trade. Going over dollar franc, we had trade balance report earlier in the week, and we were looking for 35 pips on that. Let's see how that one did. 35 pips or less movement. Again, we're doing iron condor. This is using Nadex spreads, where we're buying the lower spread and selling the upper spread. And so if I go ahead and look at that again right there on the 20th, and let's see here, we got the 20th coming out at 11 o'clock, so this one's a little bit later in the evening. And we'll measure that on the 20th over here. So from 11, okay, and then we take that on to 7 a.m. So 11, that's going to be 11. Let's see, a little bit later on this one. Let's see, the 20th, let's go to 11 p.m. All right, there we go. So 11 p.m. at 2300. And like I said, we'll measure that on over. If I can get the right, there we go. To 7 a.m. And let's see what kind of movement we got on that. So for that report, it looks like we got 25 pips. Again, only a 5 pip profit on that. Not a massive one. Unless you're able to take profit when it moved up and then it came back down. But, you know, if you just, as far as this letting it sit there, still a profitable trade. Still within inside of our range on the trade of what we expected for movement during that time frame. Going on in, we had, you know, obviously some other announcements that came out. We talked about various reports on the euro, the public sector. We talked about some earnings releases on Verizon, United Technologies there in the morning. We also had, of course, you know, Apple and Microsoft having their earnings releases coming on out a little bit later in the day. Let's see here. That had obviously a massive impact. That's one of the things you got to be aware of. Then we went in, and that evening we talked about Aussie having a report, not necessarily a tradable one, but their CPI coming on out. And we had the pound dollar with a variety of reports coming out with their bank rate vote, and sort of changing up the days here, not making it as easy and as predictable by doing it on the same day, same times. Let's go look at that at 11 p.m. to 7 a.m. How did that do yesterday? Did it break out of the 40 pip range, or did it stay inside of it during that time frame? And let's see here. So weird, my phone just like came on by itself. Okay, so going on over here, 11 p.m. at 2300. Okay, so we'll take the closing price there, and then we went down as far as 7 a.m. What's the highest or lowest? Because remember, this is a straddle, so you're going to take profit before. But right up there, by the way, to that point of control level up to 27 pips. Not really far enough to cover the risk on that side. But on the way back down, came on down and did move, 34 pips for pulling back. Probably looking at a small loss or breaking on that trade depending upon your entry. So not much really happening on that trade. Not a bad trade, just not a great trade. Stay there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome back here to the Diagnostic Trading Hour. A reminder for you, we do have, looks like Qualcomm having its earnings today. Remember, it's one of the major suppliers of Apple. It's coming out at 4 o'clock. So if you're a stock trader, option trader, you want to be definitely aware of that. It can have an impact on the NASDAQ, not as much, obviously, as Apple does. But anyways, be aware that earnings announcement is coming out at 4 o'clock today on Qualcomm QCOM. Okay? Other things happening today, we got the New Zealand interest rate, their Fed funds rate announcement's coming out at 5 o'clock. Expect that to impact the Aussie and the yen quite a bit when that does get released. And then, of course, markets will open up. So just be aware of that one. Looking on a little bit later, we got yen trade balance news. Not a massive thing, but just something to have on the calendar. We do have one trade on the day here left remaining for the day. And that is the pound retail sales news. That's coming out at 4:30 a.m. Usually pretty quiet market movement on that. We're looking for an iron condor in between basically about $35 in minimum profit. So what you do is you go, what's the max profit of the bought spread that's below the market? And what's the max profit of the sold spread that's above the market? These are probably going to be somewhere between 10 to 30 pips, okay? Between these two combined, ideally as equal as possible, we're looking to get $35 at a minimum. Ideally more, but at least $35 is what we're really looking for. And We expect the market to stay within 35 pips or less. As long as it does, then we are able to net a profit on the trade. And pretty simple trade to do. So, but just be aware of pound retail sales coming out tonight. So if no other reason, even if you're not trading it on Nadex, you're not taking advantage of it like I'm talking about, knowing that it moves 35 pips, if you are trading, pound dollar itself is good to be aware of. Two, also knowing just that it's coming out. You don't have to ride the bus to be, need to be aware of the bus when you cross the street. So just know that news is going to be released. Europe has a lot of reports coming out at 3 a.m., so expect a nice London open there. And then Cadbury's reports are coming on out at 8:30, giving us another Iron Condor setup for an 8 a.m. entry for a 10 a.m. expiration. Using the spread, doing an Iron Condor, buying the lower spread, selling the upper spread for a minimum profit of $30. We got a U.S. unemployment claims coming out at 8:30. They've really not been a massive event unless they've been sort of a shocking event. We also got the weekly natural gas inventory report coming out tomorrow at 10:30. It's like we had oil inventory come out today. And, I talked to you about how, if the inventory is higher than expected, natural gas usually drops. If it's lower than expected, it usually rises. There's a lot of ways to trade it. You can trade it on pullbacks. You can trade it on pullbacks off of deviations, off of, volume profile areas. You can also go in and you can simply do really cheap straddles or strangles right before it. Or if they're really expensive, you can look at iron condors or butterflies. There's a lot of ways to trade these reports. The great thing is they come out every single week. And, definitely use your expected ranges when you're diving into them. Okay? So that's a weekly natural gas inventory report. If we're going over here, we got trade balance. Let's see, going on. That'll come up. That unpacks some New Zealand traders there. Not a big thing. China is going to have market flash manufacturing. It's been having a bigger and bigger impact on the market. There's also a meeting of the IMF actually including the one and two its currency units. IMF has their own currency, and it's backed by a basket of currencies, and they're talking about actually using China's currency as part of that basket. Let's see. We got the French flash manufacturing PMI. The Euro-German flash manufacturing PMI. All these are just events to be aware of. That's tomorrow at 3:30. Euro flash 4 a.m. Again, most of these have little to no impact. Then we got on Friday, we're going to have the U.S. new home sales and Richmond manufacturing index 10 a.m. So that's coming out. How can we trade the new home sales release that's coming out on the 24th? That report ought to allow us to trade euro dollar entering at 9 for 11 a.m. for a $30 minimum. Take profit on that trade. So definitely look at that as a potential setup for you at the week. And then the last thing we got really on the list, noteworthy, is the U.S. flash manufacturing PMI news. And so not something you can so much trade, but just something to, again, have on your calendar and be aware of the trade. So that way you're able to take advantage of it when it comes up. All right, so let's see what else we got. All right, well, that's pretty much all the news on the list. And let's see here. That covers this week or earlier in this week and the rest of the week. And some people, they get a little bit confused about the iron condors versus the straddles. And so I thought I might do a little quick review for you on what those are and how they work. And just sort of, like I said, step into them and lay out how they work for you. So give me 1 second. I will pull up something so I can give you an example. Okay. All right. So pulling up the scanner here. Let's see if I can find something that has some positive premium for us. All right, let me just pull off the NASDAQ as an example. And zoom in on this, make it a little easier for you to see it. Okay. So if I were to say, I don't care what direction the market goes, I just want it to go. Okay, so again, if I were to say, I don't care what direction it goes, I just want it to go, that's a straddle, because you want it to move. All right, so just, very simple way to, try to analyze it for you, to help you analyze it, is to literally look at it that way. Like, hey, I don't care, just go somewhere. Okay. If you can get that, then you've pulled off a straddle. And so that'd be like buying this spread and selling this spread. Okay, and let me, there we go. Yeah, see if I get a little better spread, maybe 46.20. I really want to do, yeah, just where the prices are at. Okay, so notice we really want it to break out of a certain level. We're actually wanting it to move up or, pardon me, move down. Okay, like if it goes up far enough, we got profit. We just need to cover the risk on this side. So this is risking, on this sold spread right here. It's risking like, $44 on the trade. Not necessarily a great one, but we need to make $44 to make that back. On this, this bot spread, we're risking 20, so we need to make 20 bucks just to be at break even. So our break even really is a little bit further than that line because we have to cover the other side. But as long as it goes far enough up or far enough down, then we can, make potentially a decent profit. Now, we can flip that around and say, I just want it to stay inside of a range, okay, which is the opposite of this trade. So instead of it needing to move up here or down here to make money, you need to stay in between the range. So doing pretty much the exact opposite of what we're looking at. So if I bought instead of sold this spread, and if I sold instead of bought this spread, okay, then what would happen is I would actually be looking at the opposite trade. Now I'm profitable. Notice this is our P&L line over here. Okay, and this is our, the price of the NASDAQ, and this is where it's currently sitting. If it stays within this range, and it can actually go a little bit further, because like right here, if I can make, right here I'm selling this contract. So if I can make $21, it can actually move $21 further than break even over here, and I can still be profitable. Right here, it can move, $33. What's it? What I can make on this one? I can make 33 bucks. Yeah, so it can actually move 33, takes 3.3 points further, and I'd still be break even because the $33 I'm making, I could lose $33 on this side and still be break even because I made 33 to cover a $33 loss. Or the $21 I'm making, I could lose $21 on the bought one because it went down, and I made 21 on my sold one, so I'd still be at break even. So you have a really wide range. If it stays in this range, you're profitable. Now, it often, freaks people out because they look at it and they look at the risk reward and they're like, I just don't know if that's going to work for me, da-da-da-da-da. And I get it. But, the reality on the trade is, you have a lot higher probability of it staying inside of a range often than you do of it breaking out, especially going into the, say the end of the day. So you'll see me often, a lot of the trades you'll see me do are going to be where I see positive premium. I'm making the premium versus me doing negative premium. And so when you see me do trades on air, a lot of times that's what you'll see. Either I'll be doing a range bound or even directional. You'll often see that I'm doing a positive premium trade. And what does that mean? When I say positive premium, the simplest way I can explain it is just look at where the market is. Okay, so the market is trading at 46.07 right here. Okay. So if I sell higher than where the market's currently trading, then that is positive premium. So if I'm selling like at $20 and, if I can sell it, point, 2 points, 3 points higher, whatever, then that's positive premium. So premium is above the market or at least above the floor, because this one's at 46.10. The market's below the floor at 46.08. So since the market's below it, and I can make $24 on it, that's all premium. It's pure premium. I'm selling higher than where the market is. I'm selling up at 46.12. So, that's a pretty decent move on that sell right there to be able to pull that off. And, has some definite benefits with it, because if you can sell higher than where the market is currently trading, then that gives you a little bit of padding if it decides to go, against you, right? So if it goes against you, you have a little bit of room for it to move, like I said, against you on that trade, where you can go in and I'm trying to get rid of this screenshot here. But you have a little bit of padding. So the market actually go up, a couple points, and you'd still be profitable on the trade. We can look at a variety of these trades. And let's see here. See as it's moving more and more towards the center, seeing our P&L is getting a little bit more lined up here. We're right now like on this side. The sell side is $24 on this side. The buy side is $31. So if the market moves closer and closer to that center, then we're going to be able to be, like I said, more profitable on the trade. Let's see here, and actually have a better balanced trade, meaning we got both sides covering both sides pretty much equally. But again, you don't have to be right in the center to pull it off. You could be over here and you still have all that extra room, and then you get all this room over here, and you got this massively wide break-even zone. And the simplest formula for break-even when you're doing an iron condor is, what is the max profit on, like, say, the buy side? Add that to where I sold. Okay, so add that. If I sold the upper one and I add, in this case, 31 pips, so 3.1 to where I sold at, because I sold like right at this line, that'd be where I'd be selling at 46.12. So 3.1 would be 15.3. That'd be my break even up here. And then on the the buy side, take what I'm making, the max profit on my sold contract, which is 22 pips, subtract that from where I bought. So if I bought at 4606.9, then 4604.7. So right down here, 4604.7. This would be my break-even point over here. So I got a pretty nice break-even range that the market can stay in between, and I actually am still able to take home a profit. And then the proximity, that's in underlying tick. So that's in quarters. Okay, so proximity is actually in quarters. So because that's how the NASDAQ itself ticks. All right, let's see here. Just try to go through some basic lessons that I know will help you out. The biggest one being, if you can start to understand that it's trying to straddle, which is, hey, I just want you to, I just want it to move. I don't care what direction it moves, as long as it moves. That right there is the opposite. So this is right here saying, hey, it really needs to take off for me. Okay, versus the other one, which is saying, I want it to stay within a range. And if it'll do that, then I'll be profitable. So this one says it has to move. It has to move outside of the range. I like trades that don't have to do anything and still make money. I mean, I don't have to be right about up. I don't have to be right about down. I don't have to be right about anything. The only thing I got to be right about is that it doesn't move too far up or too far down. That to me, that is helping put the odds, in my favor by doing a trade like that. So there's a lot of, like I said, there's a lot of different ways you can trade on Nadex. But what I love about this, I mean, I traded options. That's how I quit my day job, was trading options. And, but all the options I was trading when I was doing that were based upon me needing to, use options that had 5 days, 4 days, 3 days, 2 days, most of the time like 1 month until expiration. So at least, a week or two. And there weren't options for day traders. There was no, you didn't have options expiring every day or throughout the day. I mean, the ones we're looking at right now expire at 2 o'clock here in just a couple hours. And so you couldn't do iron condors, for 2 hours from now. You couldn't do straddles for an hour or two from now. And you'd have a lot more money to do them. So stay there. We'll talk a little bit more about this when we get back after this break.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Alrighty, folks, going back here to the Diagnostic Trading Hour. And just talking about one of the radio hosts here we're talking about just internet speed and the traffic jams you get at your house, because my kids have smart TVs and smartphones, and they're all watching, their own TV shows and everything directly through the net. And as a trader, it's important to have a very solid, very stable internet that can cost you a lot of money without it. AT&T actually just launched out a new GigaNet service, which gives you speeds up to 1 gig. As you can see, it's not exactly 1 gig. Right now I'm getting 692. I just got this installed last week. 692 megs down, 341 up. But I'm not complaining. I don't notice any kind of speed slow down at this point, no matter how many smartphones or TVs or computers are going on at one time. And so just always be aware of that. You do need as much speed as you can get as a trader. Those seconds and milliseconds make a massive difference. And I've come to respect milliseconds a lot more in the past year. My daughter now, she does barrel racing, and on horses, they go in and they race in a cloverleaf pattern around barrels, and it pays out big money. I mean, there's millionaires barrel racing. And one of the ladies that she follows, she won, and she a race in California this last weekend, made $100,000. And literally in less than 20 seconds, going in 15, 16, 17 seconds. Second place made 25 grand, and they were separated by less than 100 milliseconds. I mean, literally less than 100 milliseconds was a $75,000 difference. And, whenever I set my servers up, I set them up in Chicago, or New York, closest to whatever exchange I'm trading that I can get, because those milliseconds literally add up into a lot of money on your entries and your exits. The first in, first fill rules and things like that happen. And so just don't underestimate the power of speed. And computers and internet are the two things. It's like putting, you don't want to go, race a Pinot car at NASCAR. You don't want to put in bad fuel. And so you need the fuel and you need the car. I'm not saying you have to have like the best that there is, but I mean, you need to make sure you have something that's not slowing you down, because it costs more to have it than to not have it than it does to have it. It does. I mean, one trade can, easily be $10, $20, $30 by itself, just due to speed. So you do, one trade a day, you're talking about $600. Well, obviously go get the internet, upgrade it wherever possible, because it definitely adds up. Especially whenever you get a flood of data come in, like off of an inventory report or a Fed funds rate or whatever, and sometimes it'll make, your internet bandwidth can't handle it, so it seeps in, and when the packets come in, and you get packet loss and your charts get messed up. And sometimes they even will jack up your computer a little bit. So just having, really solid, stable internet can be obviously very, very beneficial. Let's see here. What else do we got going on? Other lessons I can teach you on the, spreads. We've talked about, what's the difference between an iron condor and a straddle. And basically showed you, like, this is an iron condor right here, where it needs to stay within the range. A straddle would be the opposite, okay? So where you're saying it needs to break out of the range. Okay, so your P&L graph now goes to, it needs to break out of this, whereas the iron condor says, hey, move up, move down, stay flat. Obviously, closer to the center is better, but I just want to be profitable on the trade, so just stay within the range and I'll be profitable. That's what an iron condor would be trying to do, and you can do them all day. You can do them every day. You can do them several times throughout the day. So it's pretty cool. You can't, like I said, you can't do that on normal stocks. But and you don't have to have 25 grand to do them. So you can start with a lot less capital. Anyways, all right, y'all have a great day, and I'll talk to you tomorrow here on the Diagnostic Trading Hour. And hope you have a great trading week. Stay tuned for another great show coming up right after this.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.